IRS wage garnishment explained. What you need to know before the IRS takes your paycheck. Have you ever received a notice from the IRS and wondered whether they can take money directly from your paycheck? Maybe you've heard the term wage garnishment. Maybe someone told you the IRS can take part of every paycheck. Maybe you've already received collection notice and you're worried about what comes next. If that is you, you're in the right place. Today, we're going to discuss how the IRS wage garnishment works, what happens before the IRS garnishes wages, what your options are, and what you should do if you receive collection notices. The goal of this video is not to scare you. The goal is to help you understand the process so that you can make informed decisions. My name is Shane Harris. I'm an enrolled agent with Profit First Taxes, and I help individuals and business owners understand and resolve IRS problems. If you find this video helpful, make sure you subscribe because every week I'll be sharing information about IRS notices, tax debts, collections, payment plans, and tax resolution strategies. Let's get started. Let's begin with the most important question. What is an IRS wage garnishment? An IRS wage garnishment is commonly referred to as a wage levy. A wage levy allows the IRS to require an employer to send a portion of an employee's wages directly to the government to satisfy any unpaid tax debts. Unlike many private creditors, the IRS has significant collection authority under federal law. That authority allows the IRS to collect unpaid taxes through various methods when taxpayers fail to address outstanding balances. One of these methods is wage garnishment. Many people imagine that the IRS simply decide one day to start taking money from your paycheck. That is usually not how the process works. This is generally a series of notices and opportunities to respond before a wage levy is issued. Understanding the process is important because it often provides taxpayers with opportunities to prevent enforcement action before it begins. Before we discuss wage garnishment, let's talk a little bit about how tax debt reaches to that point. How tax debts turns into collections. Most IRS collection cases begin long before the garnishments. The process often starts when the taxpayers file their return showing that they have a balance due. Sometimes the taxpayers never file the return and the IRS later assesses taxes. Other times, a return is audited and additional tax is assessed. Regardless of how the debt arises, the IRS generally begins by sending notices. These notices explain the amount owed, penalties, interest, payment expectations, and collection rights. Many taxpayers ignore these notices because they don't know what to do. Others believe they will address the problems later. Unfortunately, later often becomes more expensive. As time passes, the IRS collection process may continue to move forward. Eventually, the IRS may begin considering enforcement collection actions. Now, let's discuss what usually happens before wage garnishment occur. The notices that come before garnishment. One of the biggest misconceptions about IRS collections is that the IRS immediately garnishes wages. In most situations, that's not what happens. The IRS generally sends multiple notices before issuing a wage levy. These notices become increasingly serious over time. Every notice serves as a warning that the balance remains unresolved. The IRS is essentially saying, we need you to address this tax debt. Unfortunately, many taxpayers continue to ignore the letters. Sometimes they don't understand them. Sometimes they're overwhelmed. Sometimes they're afraid. But avoiding the notices does not stop the collection process. In fact, ignoring the notices often allows the process to continue towards more aggressive collection actions. This is why I encourage taxpayers to open every letter they receive, even if the content are unpleasant. Understanding the situation is better than guessing. Let's talk about when the IRS may actually move forward with enforcement. When the IRS can garnish wage. Generally speaking, the IRS must follow certain procedures before issuing a wage levy. The IRS typically provides notices regarding the unpaid tax debt and collection activity. Taxpayers often give opportunities to respond, request payment arrangements, or exercise appeal rights. If the matter remains unresolved, the IRS may proceed with collection enforcement. A wage levy may then be sent directly to the employer. Once the employer receives the levy, they are generally required to comply. This often surprises taxpayers because the employer has a very little discretion in the matter. The employer cannot simply ignore the levy. The employer cannot choose whether they want to participate. They must generally follow the instructions provided by the IRS. Now, let's discuss what happens after a levy is issued. What happens when the IRS garnish your wages? When the IRS wage levy becomes effective, your employer receives instructions regarding how much must be withheld. The IRS does not necessarily take your entire paycheck. However, many taxpayers are surprised by how much may be affected. The levy can continue from paycheck to paycheck until the situation is resolved or the levy is released. This is one reason wage garnishment creates so much financial stress. Unlike a one time event, a wage levy can affect future paychecks. Many taxpayers find themselves struggling to pay rent, mortgage payments, utilities, transportation, insurance, food expenses. This is why addressing IRS notices before collection reaches this stage is so important. Let's discuss another common concern. Can the IRS garnish self employment income? Many people assume wage garnishment only affect employees. However, taxpayers who are self employed may still face collection actions. The IRS have various collection tools available. Depending on the circumstances, collection activity may involve payments from clients, business income, or other assets. The specific collection method depends on the facts of the case. This is one reason self employed taxpayers should take IRS notice seriously even if they don't receive a traditional paycheck. Ignoring collection notices does not eliminate the problem. Now, let's focus on what most people really want to know. How do you stop an IRS wage garnishment? The answer depends on the taxpayer's circumstances. There is not a one size fits all solution. However, there are often options available. One possible option is entering into a payment arrangement. Another possible Another possibility may involve demonstrating financial hardship. Others may have appeal rights available. In certain situations, there may be questions regarding the underlying tax assessment itself. The appropriate solution depends on income, assets, expenses, filing compliance, collection history, overall financial situation. This is why proper case analysis is so important. The best strategy for one taxpayer may be completely inappropriate for another. Let's talk about one of the biggest mistakes taxpayers make. Common mistakes during IRS collections. Mistake number one, ignoring notices. Mistake number two, waiting until garnishment begin before seeking help. Mistake number three, assuming there are no options available. Mistake number four, failing to file required tax returns. Mistake number five, agreeing to arrangements they cannot realistically maintain. The earlier a taxpayer addresses collection issues, the more flexibility they often have. Once enforcement begins, the situation becomes more urgent. Before we wrap up, let's answer a few common questions. Frequently asked questions: can the IRS garnish my entire paycheck? Generally, the IRS follows rules regarding exempt amounts and levy collections. The amount affects depending on the taxpayer's circumstances. Will my employer know I owe the IRS? If a wage levy is issued to your employer, they will generally become aware that collection action is taking place. How long can a wage garnishment last? A levy may continue until the tax issue is resolved, the debt is satisfied, or the levy is released. Can I stop a wage garnishment after it starts? In some situations, yes. The available options depend on the facts of the case and the taxpayer's financial circumstances. Final thoughts. IRS wage garnishments are serious, but they usually don't happen without warning. In many cases, taxpayers receive multiple opportunities to address the problem before collection activities reaches that stage. The worst thing you can do is ignore the situation. The best thing you can do is understand your options and take action early. Before I let you go, remember this: tax problems rarely improved by themselves, but many can be resolved when addressing promptly. If you're dealing with the IRS notices, unfiled returns, wage garnishments, tax debts, or any other IRS issues, schedule a consultation with Profit First Taxes. The link is in the description below. Even if you aren't ready to hire someone today, subscribe to the channel. Every week, I'll be sharing information to help you understand your options and avoid costly mistakes with the IRS. If you found this video helpful, please like the video, share it with someone who may need it, and thank you for watching. I'll see you in the next video.